not only has he now had a false return file, he also won't get his return back in any seemingly timely fashion. And they've probably got his identity, so he has problems to worry with besides that. And then the other thing is there's not really a way for normal people to prove themselves to the IRS. Normally, like credit cards and stuff, you have PINs, right? So you have to actually prove. I also have the security code. In the case of the IRS, they only give you that after you're a victim of having this happen to you. So instead of letting you actually do it kind of preemptively, they won't. So, all right. And then on to the more interesting stuff. If you've done some work in business consulting or you've worked for yourself, a lot of you do freelance, this also applies. These are things that you can kind of work on to reduce the amount of money you owe. It's often called writing off an expense. You're allowed to deduct reasonable things as expenses. For me, I actually deduct like laptop and cell phone and a bunch of other stuff. Yeah, Jim's point is laptop. And kind of what reasonable is depends on your business. A good example of this is my mom actually worked as a personal chef just for fun on the side for a while when she was like out of college. And she actually got to like write off I think half of her kitchen. She's like, this is the amount of money it takes to keep my kitchen running. And since I cook for money, you're gonna just have this as an expense. Benefit of that is if my business posts like not very much money, all the money I earned in the business, I don't have to pay tax on. And you can do that for a couple of years before the IRS will be mad at you because they assume that early businesses post a loss. For you guys, you should totally, like if you bought computer stuff, I mostly just go through Amazon or like your credit card statement and say like that applies, like this actually I can use during consulting, or this applies, or this applies. Yeah?
So I have a question about that. I was looking into that, and they asked that you have to like be able to prove that you've used it for like a certain percentage of your time as your business, and like they want like written like logged hours and stuff like that. Is that something that like you have to actually worry about, or like if I say I use my desktop for 90% work, like how do I prove that if they go what you use that for fun?
So a couple things. First, the odds that any of you will get audited is very low. You're just not very big fish. Beyond that, I actually do. I have a list of, these are the things that I qualified as things I expense. I also have the Amazon link to the receipt or whatever it was. I filed that away in Dropbox in case they ever yell at me for that. And then as far as like, no one's gonna say, hey, 50-50 like student or 50-50 student consulting, right? So it's not that bad. In your case, you have a desktop and a laptop. I would probably just say, yeah, my laptop's only used in class, right? My desktop is where I do all of my work and have all the stuff that's private. Stuff like that, you'd probably get away with it. I would argue that like the extremes of 0% and 100% aren't the best. But anything reasonable that you could justify, they can't really get mad at. And worst case, if they are mad at it, they just say, hey, revise the figure. And then you'll switch down to, okay, it was really only 30%. And they go, all right, that's fine with you, and then you owe $10 extra. So it is something that you might run into. More oftentimes it comes up when you have like a large business and someone's like categorically for every employee deducting something they shouldn't have. And then you're like, oh, I actually now have a big problem because I'm going to get hit by a bunch of stuff because I'm an employer and I'm going to have to prove that all this actually occurred. And if you haven't been keeping records, then you're toast. But in the age of Amazon, like really, you should have online records for most of the things you do. And certainly be able to back up whatever you say are your expenses. But that, again, isn't that bad. You can even post a loss for a few years. Not really a reason to do this. Like losing money doesn't help you tax-wise. So get to a reasonable number and stop. Or whatever's mostly fair. Like I don't regard any of the expenses I've done as not fair. And so I'm perfectly okay with doing that. But that's something to keep in mind. Yes. This is actually what we did at the end of last year. We went and we bought a bunch of hackathon stuff because we'll use it and because we knew that we posted a profit. So that's something we can do. That's the kind of useful side. This is the opposite though. There are times where you can actually screw this up. You can do things you're not supposed to do. And in that case, it's absolutely awful. The IRS is a horrible institution to have on your tail. And I do not suggest it. So yeah, cell phone, laptop, camera if you do stuff where you're actually taking pictures of things or you're posting things, you're doing any new stuff. Internet, I actually did our expenses. Electricity, in the case of my mother kitchen. Auto, there's actually kind of a couple standard rates for like, hey, I've driven across wherever, and I did that for business, and you can do that. So that's something to keep in mind. Yeah, just depends on what you do for business. All right, yeah, so keep really good records, kind of be reasonable. Google everything. And then I also went ahead and threw some interesting sources for stuff in the presentation notes if you want to go back and look through them for a more in-depth guideline about specific things. One of them is actually a list of like, these are commonly deducted things. And you go through and it's like, I did that, I did that, I did not do that, I did not do that. I paid an accountant or didn't pay an accountant, stuff like that. So that's a good idea to get a feel in general for what can be deducted. Because me just saying cell phone isn't very helpful. Like, you might have some interesting stuff that came up. All right. And then some other tax considerations you might run into eventually that we'll go through real quick. If you're in multiple states, how many of you have this happen to you this year? Where like you worked in lots of states and you're utterly like, yeah, kind of sucks. It's really bad. Especially when certain states will go like, oh, that's all our money. Like you worked in ours, and then you have to say, no, I only earned this much in your state. The guild is currently in NY. We do business in New York, even though we are incorporated in Delaware. So all of you will actually have to pay New York taxes on that. That's not that bad. It's really not that hard. Tax Act lets me do it for free. But in the case of, I think New Jersey is pretty bad about that. North Carolina tried to do that. They're like, oh yeah, you actually, like, you're our resident. It's all our money. We'll tax it. And this kind of has to go, yeah, where your residence is. Also really weird in like New Jersey and New York, where you go and you commute oftentimes across the border and then work. That causes a couple problems. So it's interesting to keep in mind. I don't know, like what's the most number of states you've posted stuff in during a year? Like, it's got to be a couple. Yeah. So I'm sure it was not very fun, but I don't know.
New York, Massachusetts, California, New Hampshire, and Washington.
Yeah. So stuff like that. All right. Actually, a fun kind of side note on this. It's in the notes so that you can go back and read it if you want. I hate Forbes. But anyway, this is actually from last Super Bowl. You think your tax situation was weird. This is a fun article about how because the Super Bowl was played in one state and NFL people play in all the different states, they have to actually, like between the 33 states they play in, declare how much they've played in each individual state, how much of their salary they pay in each individual state, and then how much of their winnings of like stuff like the Super Bowl where you get a bonus you pay in specific states. So in this case, they were talking about how like Peyton Manning will win a bonus in California, which will go towards his expected earnings in California, like adjusted. And it's just a really big mess. You're like, I would not like to have a job like this where I actually have to care about that. But it is a fun article. They go through and they kind of talk about the different bonuses he gets, and then the fun math comes in. It's like, yeah, luckily his duty day ratio would go from 7/33 to 7/200s, and you're like, I don't know what that means, but I'm glad I'm not him and have to deal with it. So he pays a tax guy, I guarantee you. So when that happens to you, seek out a professional. But if you really want to see an uber complex case of it, that's a pretty fun anecdote. All right. Yeah. And then the other thing that a lot of you will come into, and I can't necessarily speak on this terribly well, maybe some of you have better examples. Startup equity investing is really weird. It has to do with like when you, hey, I have stock now, but I haven't really earned the money I will earn on the stock, but I'm still holding it, so I have to pay some money, but not all the money. A good example of this is you have a startup that's only worth like $4, right? You issue like 10,000 shares of stock. I now have 1,000 shares of stock. I only really pay 40 cents of income to buy all that stuff. So hey, I now have to pay that much in tax. When I go sell it though, it's worth a lot. So I have to tell the IRS how much it was when I bought it, so that they know the difference, so that they can tax me on it when I sell. Oftentimes your CFO, if they're good, should go through and actually talk and explain like, yeah. They should go and they should say, actually I think a couple of people on did this pretty well. They're like, this is kind of the situation of the company. This is what we'd really like to explain to you. This is how it personally affects you. There are some interesting memos you can read about Elon Musk explaining like when to sell SpaceX stock and like, oh, don't worry about your stock now, it'll be okay, and all you guys complaining that we haven't had a liquidity event and stuff. But schedules and bases should have to be filed with the IRS. So you actually do know when you accept stock, you owe stuff to the IRS. And at that point, knowing that will help save you a lot of And then when you liquidate these, you do pay taxes. Now, this is something I kind of added. This is something that I've done that has kind of stuff to do with your taxes and with your personal information that I would suggest you do. So this is something I would suggest, yeah, find a Saturday, lock yourself in the room, grab a bunch of crackers, and just eat and drink soda and finish it. Credit freezing is a really, really good way of locking down your identity as far as getting money and preventing people from like getting credit cards and loans in your name. Has anyone heard of this before? Okay, have any of you done it?
I know you can do it on the Discover app now. We'll love it.
Well, yeah, that would be awesome, because it is a hassle. This locks your credit from inquiries. So if anyone tries to get credit from you, or credit for you, you actually have to give a PIN. So it prevents them from just willy-nilly, like, if I found a pre-approved credit offer in the mail, I can't pretend to sign it as you and get it, stuff like that. It's really helpful in preventing identity theft, because for the most part, identity theft is for the purpose of like getting monetary gain. There are other reasons it might happen, like getting passports and stuff, but for the most part, even if they go, hey, I need to rent an apartment, they're gonna do a credit check. So something will fry and it will be pretty obvious that they're doing something wrong. It is a bit of a hassle to set up though. I did put some stuff in the notes about how to do it. But you actually have to, I don't know how the credit agencies work. It's actually kind of a weird system. You got 3 credit reporting agencies. You have Experian, TransUnion, and Equifax. They all are kind of what make up your FICO score, which is your credit score. All of them were mandated by the government to offer you this. They actually don't make money on you if you've frozen your credit. So they won't really suggest it, even though they're legally required to do it. You pretty much mail in a bunch of paperwork, say, hey, here's my credit. They mail you a PIN, you don't lose a PIN, and then when you apply, you have to just fill out that. So it's not that bad. And it's interesting that like, who's heard of like LifeLock and seen all their random commercials around? That's actually not as effective as this. LifeLock will just mail you, oh, someone stole your stuff, we'll take care of it. As opposed to, hey, you actually were able to steal the stuff because it had a PIN that locked them out. And why is it worth the hassle? It's pretty much impossible for identity theft to occur for finance this way. It lasts forever, you never touch it again. And then it's, again, way more effective than LifeLock and other things that just, or like when people are hacked, they're like, oh, we'll give you credit monitoring, right? It's like Target hacks, and so we'll pay $30 a month for credit monitoring.